Hey guys, hope you all doing well. It's Saturday again. These Saturdays, for me, just come faster and faster. I don't know what it is, but uh, yeah, time flies, man. Time flies. But today, what I want to go over is closed-end funds, right? I've covered quite a few of, not quite a few, but I've covered a few of them in my day, and I don't cover them enough, probably. Because I still see people getting into some funds that probably, it's kind of like high yield investors, right? When you first get into investing, you're like, you see a yield and you're like, yes, that's it, and that's all you look at, right? Well, there's no different when it comes to closed-end funds. Closed-end funds historically are for the income seeker. Typically, closed-end funds are too small for institutional investors, so a lot of times it'll just be retired folks. A lot of retired folks are invested in these, and that can pose a issue, and it can also pose an opportunity. And we'll talk about that here going forward. Now, if you're new here, like, share, subscribe, do all that good stuff. Down in the description and the pinned comment below is ways you can support the channel. M1 Finance, till the end of the year, end of 2021, is offering $50 for any brand new accounts you open and fund with at least $100, or $500 for a retirement account. So if you don't have an M1 Finance account, those are guaranteed free returns. And if you use my link down below, you get $50 and I get $50. It's a win-win. I love those kinds of opportunities. So I would appreciate it if you would take me up on that. Also, Amazon links, all that stuff down there. So today we're going to use a website, and it's called CEFconnect.com. This is a wonderful website. They have an education center, a fund screener. You can build portfolios. You can do all kinds of stuff on this site. But today I want to focus on a couple of funds. One that you should probably stay away from, and I'll talk about why. And the second one that is trading surprisingly at a discount still, and we'll talk about that. So, first one up, we'll just type in the ticker, and it is GUT. And the interesting thing is, GUT is from Gabelli, and it is a utility closed-end fund. So when we think of utilities, right, we think of safety, we think of yield, and, it's got utility in the name, so it must be good. Well, take a look at this. Currently, the share price is $8.19. You can see right there. And here is the NAV. Now, what the NAV is the net asset value. So that is the complete portfolio, right? The value of the fund's holdings divided by the amount of shares. And right now, that is only $4.22. So if nobody understands the premium and discount thing, right? I'll go over this real quick. With a typical ETF, the price and net asset value, so the price you pay for the fund and the net asset value, are very, very close. ETFs are designed to be that way. So if a ETF is selling for $50, the value of the funds, your share in that portfolio, is $50. Okay. Now with closed-end funds, these are separated. Those two things are separated. So you have a net asset value. So you have the value of everything in the fund divided by outstanding shares, and then you have the actual share price. Now, the share price is determined by supply and demand, and like I said before, these are typically not owned by institutional investors. There's some ETFs that invest in closed-end funds, but they're very few and far between. The majority of this is just basically your basic retiree, looking for an income stream. So this is what presents an opportunity or, a possible downfall. Now here we'll see that at present, Gabelli Utility Trust is trading at 94% above its net asset value. So you're paying $8.19 for a portfolio that's worth, you're paying $8.19 per share for a portfolio that has a value of $4.22 per share. That's not a good deal, my friends. And this is the downfall, because people see, like I said, these aren't, institutional investors. Most of the investors that would invest in something like this will not research, will not look at what the fund is invested in. All they're going to look at is, this gives me a 7.3% yield, and it pays me every month. Okay? And it's a utility trust. And it's funny that the trust is in there. It's a utility trust paying 7.3% monthly. That is probably what a vast majority of the owners in this see, right? What they don't see is, if this were to liquidate, it probably won't, I'll give it that. But if it were to liquidate, you as a shareholder will receive the net asset value of whatever the portfolio is. So if you bought into this at $8.19 and this fund decided to liquidate, you would only receive $4.22 back. That's it. So you'd lose almost 50% of your money. Now, the likelihood of it closing, probably not, but it could probably, the discount could narrow. The premium could narrow. Look at that. At the 52-week low, it was trading at a 50% premium, right? So if it went back to that, you'd lose 40%. So it's not a good thing, because even if you look at the 5-year chart on the net asset value, it just has gone from the right to the left, but the price has increased. So you really want to pay attention to the net asset value of these funds that you are buying, no matter what it says. Utility trust, right? Not a good one. So not one that I would suggest owning. It does steadily pay 7% yield, but probably want to stay away from that. Now let's move on to the one that you guys probably guessed it, that is still trading surprisingly at a discount, and that is BST. Now we'll look at BST, and that's the BlackRock Science and Technology Trust. I have done videos on this and BSTZ. I'll link those probably down below and up top. But as you can see with this one, you have current share price, $54.88. Your net asset value, so the value of everything in that portfolio that you're buying, is $58.04. So you have a discount of 5.44%. So essentially, you're buying $54.88. You're paying $54.88 for $58.04 worth of a portfolio. So you're getting an automatic discount. And it's surprising to me because this has been a extremely strong performer, not only in just capital gains, which closed-end funds are not designed for. They're not really uh, 99% of all closed end funds out there, either I'm kind of talking out of my cheek, but they all either trade flat or they've traded down over time. And BST is a very strong exception. And this is a extremely rare opportunity to buy this fund at a discount. It's currently paying 5.47%, and it pays that monthly. And it just recently raised its distribution amount to 25 cents a month. Now, you look at this one. Now, the net asset value is in blue, and the price is in the dark blue, or it's black, one of the two. And this is typically traded at a premium until they did that rights offering. Now, a rights offering on a closed-end fund could be dilutive. In other words, they're introducing more shares, and if you don't buy them, you don't get to participate. So those shares actually kind of, in a way, become less valuable because you have more shares fighting for position, if that makes sense at all. But ever since then, it's traded at a discount, and it's been disconnected from the net asset value. And the net asset value is kind of flatlined. It's been going up here a little bit lately, but they receive those funds, and who knows what they've invested it in. I haven't looked at it close enough to know what they're doing with that money that they got from the rights offering. But if history tells anything, I think they'll be successful, because if we look at it on a 5-year chart, you can look at this thing, and it started at $20 and it's now 50. They started their net asset value in their in the fund at $20, and they've raised it almost to $60. That is a sign of great management teams. And you'll see it's pretty much ran, the NAV and the price have ran together very closely, especially in the last year or two. They've ran very closely, and just really recently, you've had an opportunity to get into this one at a discount. And if you look at it here, you can look at the averages. So in the past year average, it traded at a 1.65% premium. So you can really kind of say that this is trading at a, what is that, a 7% discount to what it averagely is. Averagely a word? It could be said that it's trading at a 7% discount to its 1-year average, if that makes sense. So there you go, guys. I hope this helped you kind of look at closed-end funds, right? You want to pay attention to that discount and that premium. You want strong managers that know how to grow the NAV. That's very important. That's more important than the distribution, in my opinion. If you're gonna invest in a closed-end fund, find one that can successfully and consistently grow its net asset value. And if you find one of those, like BST, and you can get it at a roughly 5 to 7% discount currently, I think it's a buy. And not only that, they've been raising their distribution amount over time. So there you have it. 2 funds, gut, you might want to stay away from. BST, if I were in the market for a closed-end fund, I'd probably be all over this one. But I'm not, so I probably won't be buying any of them. But I'd keep my eye on BST. If that discount widens, I know we've been having a little bit of turbulence in the market. Maybe if we have a little downturn, maybe this discount widens even more, and you can pick up shares of a high quality closed-end fund that managers know what they're doing, know how to grow their net asset value and increase the dividend, which is a rare gem in the closed-end space. So hope you guys enjoyed. If you did, like, share, subscribe, do all that good stuff. Leave me a comment down below, and we'll talk to you guys later. Have a good weekend. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.